Hello traders, welcome back to Your Nifty Guy, your daily no-nonsense space for Nifty price action trading. In today's video, we are going to break down what actually happened in the market today using only clean price action and market structure, no indicators, no over-analysis, and no guesswork. I will show you where smart money activity is visible on the chart, which levels really matter for tomorrow's session, and most importantly, how I am building a simple and realistic Nifty options trade plan for tomorrow that you can actually execute during live market hours. Whether you are a beginner in Nifty trading or you are already trading weekly expiries, this video will help you understand how to stay on the right side of the market and avoid emotional trades. So make sure you watch till the end because the final part of this video is where I share my exact execution zone, risk control approach, and the structure that I personally follow in my own trading. If you find value in these daily trade plans, do hit the like button, subscribe to Your Nifty Guy, and turn on the notification bell so you never miss a clean, rule-based Nifty setup. Now, before we jump into the analysis, the link to the Telegram channel is in the pinned comments of the video. Make sure you click on that and subscribe to the channel as well. I will be sharing in my views related to the stock market as well as news which are of relevance in the stock market. And yeah, make sure you are subscribed there as well. Now let's open the charts and get into today's Nifty price action and tomorrow's trade plan. Nifty opened with a gap down and immediately went into a good selling today. Now, today's price action is very, very important in the sense that, yeah, we can see some signs of actually breaking out of the sideways zone. And today, what we saw was also a kind of a clear structure. If you look currently, Nifty Nifty constantly moved in a lower high, lower low structure today. Although it was a no trading day for me, Nifty opened around with a big gap up and around 2 days of low immediately went and gave us closing below the 2 days low. Now I actively was looking for a trade out here. After these three candles gave us a good closing below 2 days of low as well as sideways activity, right? Try to understand wherein what logic or what chain of thoughts were going on in my mind is number two, one, we are below 2 days of low. We are getting this particular zone broken after 2 days of good sideways volatile activity. And the trade that I was planning here was if we would have gotten a very smaller pullback, no, this was a very, very big pullback, and only if after this particular move we've got a smaller pullback and then this low would have broken, this would be the cue to go absolutely short in this particular trade. But then again, market had its own plan. You got a very, very deep retracement, and then finally markets broke below this particular low, and as you can see, anybody would have shorted the markets at the break of this particular would have been trapped, because I always say whenever you are trading breakouts or breakdowns or any particular trade where whenever you're entering, make sure you try to understand and see where the market is exactly coming from. Is the market exhausted or the market still has the steam to carry on the move? Now the market had already traveled a lot of distance while it was breaking this particular low, and the chances of it actually continuing this particular move on the downside was very, very limited. And as you can see, it immediately kind of reversed. And there was a good divergence as well on the 5 minutes as well as the 15 minutes time frame. So you can see out here, markets making a new low, RSI making a new high. Same was the story on 15 minutes time frame wherein the markets made a new low. Out here, RSI made a new high. So it was a good divergence, but then I did not want to take any trade on the long side because the structure was clearly lower highs and lower lows. Out here, market did give a good move again on the upside. Now, out here, if we simply plot Fib, we can see the first selling actually came in from around the point 0.5 to 0.618 zone, post which this was a liquidity sweep, and then market immediately came down. Now, this was a trade which I actually kind of missed entry out here. I was tied up with something and was not actively looking at the markets at this particular time. And Otherwise, this would have been a good entry. A earlier entry could have been planned out here as well after this particular liquidity sweep and this up move, which failed to make another new high, as in no change in structure, which could have been possible if it would have continued upwards. This would have been the higher low, and then markets could have inched forward, but then this would have been a very good entry, which I unfortunately missed. And post this again, market gave some created a new low out here, got some pullback, and then again when this low was broken, this move came in much later. And the strength which the markets fell down out here was again complemented by a move on the upside. And this is what I always tell you guys: whenever there is a good momentum based trade, you see a equally good momentum on the opposite side as well. And if you are in a trade wherein you entered into puts at this break of this particular move, the slight hints that the market is giving of going against you, that is the chance you that is the place that you get out of the market, and you do not wait in hope or in anticipation that the markets might again reverse and go back in your direction in your favor. And this was it about today's price action. Absolutely good price action if you compare, or if you see it on a 15 minutes time frame, it's even cleaner, right? If you can see complete higher high, higher lows formation in the markets today, and we have finally actually also broken down below this particular zone. On the daily time frame, we finally have a candle wherein we have a lower high, a lower low, as well as a closing which is below previous day's low, in fact, below 2 day low, absolutely. And for a brief moment, we had also breached down below the 3 day low, and wherein the buying actually came in from. And I'll simply be using this particular swing. Now, this is not an active support because the market structure isn't absolutely clear out here right now. But still, I will be putting this down as a daily fib level, simply because this is in between these two swings. And of course, the charts have been damaged by these two big ass candles which we had seen. And in case if we have to see that the markets are inching forward and it has to go up ahead, we cannot see that the markets will immediately go up like this. It will obviously get some retracement, and that is the reason why I have drawn this particular fib level. And if you can see, we actually did get a good amount of pullback or the support which came in from the market from around the point 0.5 levels on the daily chart itself. On the 4 hourly chart also, we have a good swing. We have a good swing out this and out this, but then again, I believe the 0.50, 0.5% levels, the fib level will be around today's day's high. Yes, absolutely. 0.5 to 0.618 is around this area. So that is the reason we don't need to mark it. So for tomorrow, I'll keep the plan of action very simple. The internet is a bit tacky today, and yeah, so like I was saying, the buying which came in actually came in from the point 0.5 levels itself of the daily fib. For tomorrow, we mark today's low with a pullback. We trade, take a trade on the downside. Now, we might also see a trap setup, so be prepared for it. Uh, if we open flattish to slightly negative and we see a candle which goes back below today's low, as in a bearish candle showing fresh activity from sellers, and then the high of that candle gets taken out, that is where we plan a scalp on the long side. Long trades I will be planning for now only above today's high. Now, what remains important to be seen is this a reversal candle based on the candlestick rules that we have and follow, or we get a follow through tomorrow, or this is simply a part of a retracement wherein sellers are lured and then market again moves up. The theory which is in favor of this particular move is that yes, FIIs have been net buyers in the cash market since the last couple of sessions, and what there's a theory which I kind of see unfolding in the market is the big gap up which came in, right? So this was the big gap up, and even FIIs would have been trapped because before this particular move came in, markets were bearish, and of course, FIIs also had huge bearish positions before this particular move came in. Now, of course, they are the big players, and they are simply not going to. Exit and book all their positions and losses. What they will actually do is they'll use all their money and firepower to bring the markets down to some level and then exit their shorts before actually going long on the markets with full force. And the power which can be seen with those particular moves coming in once they have reduced or lightened up their short positions. And this move might be a part of that. So that if that is the scenario or whatever it is, we are not going to predict. We are simply going to be prepared for it. And because of this particular fib level which we have over here, if we see a change in market structure out here, right? That is the reason I've simply drawn more than it. If we form a base, or if we see, whenever we see a change in market structure out here, we can take a trade on the long side as well. So I hope the plan for tomorrow is clear. Still, we are in a gray zone right now, and there is no 100% absolute clarity with which we can go in with 100% confidence in our trades. And again, suggestion would be to keep your positions light and be on the defensive right now, and do not trade with aggressive style right now. Reduce your quantities and double sure your double check your entries, and only once you are 100% sure about a good high probabilistic move, should you take the trade. So yeah, that's it for today's Nifty trade plan, guys. Keep it simple, respect your levels, and most importantly, respect your risk. If this video helped you get a clearer market view using price action and market structure, do hit the like button, subscribe to Your Nifty Guy, and share this video with someone who is serious about disciplined trading. I'll be back tomorrow with another clean and rule-based Nifty plan. And remember, in trading, consistency beats excitement. Protect your capital and profits will follow. I will see you in the next video. Cheers and thanks for tuning in, guys.